It's Drive Time with Holly. Business and consumer news you can trust. I mean, what else are you going to do sitting in traffic?
Yes, and welcome to the show, everyone. It is another edition of Drive Time with Holly. I'm Michael Yaffe.
And I'm Holly.
And we talk about business and consumer news. But today we have a topic that is not always the most fun topic
right.
for people.
Yeah, it's not always the most fun topic. It's totally necessary, and it's helpful information to have. And so we're going to rip off the Band-Aid and just talk about it.
Well, and we have a load of experts on the show today. So we're going to get you through it. And that topic is, of course, taxes.
Yeah.
You know, it seems some people might think, well, I don't have to do that till April. I don't have to worry about that. But I think it's a good idea to plan ahead when it comes to your taxes.
The calendar's winding down. So now's the time that you start to corral the papers, corral the receipts, start getting your head, screwed on straight. You start looking for the W-2 after the first of the year.
Exactly right.
Now's the time.
Yep. So we have a bunch of experts. We're going to talk about personal taxes, the best way to file your personal taxes, what you need to know about it. And then later in the show, we're going to talk about business taxes. We have a lot of small business owners who listen to the show, and it's not always the easiest thing to do to navigate through those taxes. And we want to help you be able to do it as easy as possible, but we want you to be able to get the best return as possible and know what kind of deductions you can get.
It's really important. You can get yourself into a lot of trouble. And if we can educate just a few people and help them prevent those mistakes and save themselves some money, because we all know the mistakes come with fees often. So maybe take a little of the stress out of the filing season.
So we want to get you as much money back as possible, but we also want to prevent you having to pay fees and having to deal with the dreaded audit.
Yeah.
So we're going to get some expert advice on this, and we actually have our first guest on the phone right now. We're talking with Prithi Daswani, who is a certified public accountant, and she's going to give us some advice on personal taxes and filing your personal tax return. And Prithi, how are you today?
I'm good. Thank you so much for having me on the show, guys.
Yeah, thanks for joining us. We're going to jump right into it. We know that as the year is winding down, people are thinking, well, I don't have to file until after the first of the year. But as 2017 closes and maybe people are getting together their deductions, they're getting together their receipts and copies of this and that, and looking for their W-2, we just wanted to talk a little bit about preparing before it's too late, not waiting until the last minute to kind of get everything together. So let's start with what does it mean? Let's start with, we talked about ripping off the Band-Aid. Let's start with everyone's greatest fear, receiving a letter in the mail from the IRS. If I receive something in the mail from the IRS that says going backwards, they need something from me, or
right.
I've been audited. Aside from take a deep breath, what advice would you give to your clients or to listeners on what the next step should be?
Well, the first things first, guys, whenever you get any letter from the IRS, let's first make sure you are actually being audited. Let's just find out what it is. Many notices from the IRS are actually just small adjustments, math errors, requests for an explanation. A simple phone call, a written statement can resolve the matter. So the first thing I tell clients, I'll have a lot of them walking in with unopened envelopes. Just open up the envelope. Read, as you said, take a deep breath, read through it, find out what they want, and generally it can be resolved very quickly. The IRS processes 1 billion tax returns. Any payment could have been misapplied. So the first thing I would say is read the letter, find out what they want. And if it is unfortunately an audit, generally they're just requesting additional documentation. So focus on what they are requesting, put together the documentation, and try to respond to it as accurately as possible. If it's an appointment, you're going to have to make an appointment. And if it's something that's completely out of your league or you don't understand what you're asking for, your first taxpayer right is asking for representation. So you can always have a professional involved.
So you're saying I should not panic and throw the envelope to the side of the room and go cry in my room or something.
Don't just ignore it.
No. You can always take those steps, yes, but let's try not to ignore it because generally, like I said, in most cases, it just requires a quick answer, something that needs clarification.
So you mentioned asking for representation. Talk a little bit about that. I had no idea. So if it were to be a full-blown audit and something that I felt like was way out of my league, and I just don't feel like I have the resources to hire my own tax professional, talk a little bit about what you meant by that you have the right to representation.
Generally, a taxpayer does not have to necessarily go straight in front of the IRS. They can request representation, whether it's a CPA, it's an enrolled agent. I strongly recommend it, especially if it's in matters you are not familiar with. When it comes to not being able to maybe afford it, like you said, there's always some sort of agreement, payment plan, something you can set up. Maybe you put together the documentation and they do the representation. The biggest key in any of this would be communicate. Communicate with your tax professional, communicate with the IRS. The problems generally become much larger when there is lack of communication and there is no response. That's when you really start seeing the big problems.
Is it always an option? Is it ever an option for me to speak to someone face-to-face when dealing with the IRS?
Some cases. Most times they'll provide a 1-800 number. You can call the IRS, and like I said, you can generally try to resolve it. If it is not a correspondence audit, in other words, it's nothing that requires written documentation, they will actually tell you, look, you need to show up call us at this time. Let's make an appointment. We need to meet face-to-face. And just so you know, based on my personal experience, the IRS knows that you are nervous. A lot of them are not out there to, they're just like you and me. They're not out there to make your life miserable. This is their job. So they will be understanding as long as you are cooperating with them. And if nothing else, you can always call up your local IRS office and schedule a one-on-one appointment if that's necessary.
So we are talking with Priti Daswani, who is a certified public accountant, tax expert. And if you have any questions out there, you can call 407-916-5400. You can also text to 23680. And one of our experts on the show today will try to answer those questions the best they can. I know pretty much almost everyone who's listening right now has to deal with this in some way or another, deal with taxes. I mean, what's the saying? There are two things in life that are certain. Death and taxes.
That's
so
right.
if you have any questions for our experts, you can call 407-916-5400.
Priti, you mentioned if you receive that letter in the mail, are the letter in the mail, is that still how consumers will be notified, or has the IRS started emailing or using digital methods to contact consumers? Do you know that?
Absolutely not. The first point of contact will always be a written letter. It'll be on IRS, a letterhead with their logo, official language. It'll have your taxpayer rights brochure included in the letter. And you will know very quickly it is official. In some cases, it might even be certified if you've not responded to it. In no case, the IRS will absolutely not communicate through email,
social media.
Exactly. They will not be sending you a Facebook or a tweet. It'll all be through written communication. The recent scams with the phone calls and the threats and the police reports supposedly being made on you, these are scams trying to get money out of you, which is not accurate at all.
Let me ask you something, Priti. When the IRS audits someone, is there a specific thing they're looking for that you have more chance of being targeted for an audit, or is it completely random?
Supposedly, by law, I'm supposed to tell you, and they will tell you it is completely random. However, having done this now for 17 years, I do notice certain areas that over and over and over, it'll show up again. It'll be mostly clients they'll have a W-2 job, but they'll have a side gig, maybe, selling, the marketing products or selling other items, and they'll have a side business and they'll have a Schedule C, and they'll be reporting losses and expenses year after year after year, and I'll start noticing, those will be subject to audit because, well, let's face it, most of us don't go into business to have a loss every year. Or I will notice large deductions for charity. You're barely making $20,000, but you're putting, $5,000 for a charitable deduction. Well, that's 25% of your income. So generally there'll be outliers when you're doing your tax returns, but I tend to notice it's anyone with a Schedule C, large charitable deductions, claiming, child tax credits, and don't necessarily have dependent children, claiming education credits when you've completed college, many years ago. There will be outliers that will trigger it.
So if I'm filing on time or even a few weeks early, at what point would you expect that if I were going to be audited for, let's say, my 2017 taxes, at what point do consumers typically start hearing from the IRS?
Well, first things first, an audit is really something, guys, that happens in such a small percentage, and the budget has really been slashed so much for the IRS. The average Joe W-2, I'm not saying they will not be audited, but the percentage is so low. If your mom and dad W-2, a house, mortgage interest, no real side profit business with a Schedule C, I really don't expect it. But if you expect to get any real audit, it's generally within 2 to 3 years that they will react, because the statute of when they can go back and go after you generally is limited to 3 years. Now, if there's a mistake, the automated system catches it right away. You'll get a quick letter. You'll file in April. You'll get a letter by May, June, July. But if it's a full-blown audit, generally they have up to 3 years that they can get in touch with you.
All right, we've been talking with Prithi Daswani, who's a certified public accountant. And before we go, Prithi, I want to give you the opportunity to tell our listeners how they can reach you and your business if they need help on anything we've talked about today.
They're welcome to call the office. We're a small, personable accounting practice right here in Florida, specifically in Orlando and Miami. And I always strive to find a solution with the IRS, minimize taxes and maximize profits. And if they want to take advantage of any of these services, they can call the office at 407-218-5921.
All right, Prithi, thank you so much for joining us today. You give us a lot of information, especially on audits, which I know a lot of people fear every year. And we really appreciate it.
You're most welcome. I just want everyone to know there are also a lot of tax credits and deductions available for anyone being affected with hurricanes this year. So just make sure you do a little bit of research or discuss it with your tax professional.
Great. Thank you so much.
Thanks, Prithi.
You are listening to Drive Time with Holly. I'm Michael Yaffe.
And I'm Holly.
In the next segment, we're going to talk with our next tax expert, Russell Goldberg, who's in studio with us today, and we will be right back.
Welcome back to Drive Time with Holly. Business and consumer news you can trust.
And welcome back to the show, everyone. This is Drive Time with Holly. I am Michael Yaffe.
And I'm Holly.
And we are talking about the dreaded taxes, having to file your personal
evil.
The necessary evil, exactly right. Having to file your personal or business tax returns. In this segment, we're going to focus a little bit more on the personal side. And if you want to call, you can call 407-916-5400, or you can text to 23680 if you have any questions. And we're going to try to answer any questions that we can come up with the best we can with our tax experts. Right, Holly?
That's right. And we have another tax expert in the studio who's joining us for the second half of the show. And, he may jump in if he's so inclined. So you may hear additional voices there. But
right.
Staying on personal taxes, what are some of the common mistakes that individuals make when filing their taxes? What are just some of the the rookie mistakes that people may make when filing their taxes.
Well, before you answer that question, we didn't get a chance to introduce you.
That's right.
in this
Sorry.
segment. That's all right. We're talking with Russell Goldberg, who is he's a tax partner with Witham Smith and Brown. And how are you today, Russell?
Great. Thanks for having me on the show today. Common mistakes are just not being complete. I think if everything you receive in the mail with your social security number on it at tax that says sensitive tax information most probably needs to go on your tax return. And the stuff a lot of people forget about, if you worked on a random job and you get a 1099 miscellaneous, the IRS is going to get that, so you need to put that on your return. Most errors on tax returns are doing them by hand and common math errors where people didn't add something up correctly. So if you can do it on a computer or there's a lot of free software, it's a lot easier. Making sure your social security number is correct on your tax return, especially your dependents, the children that you claim as dependents or anybody else, make sure that their social security number is correct. And I think you also have to put the date of birth because that helps with some deductions.
Right. So, and if I have a big weekend at the casino, do I need to report that to Uncle Sam?
Well, you need to report all the income to Uncle Sam. But if they send you a notice that says you won that money, the IRS is going to get a copy of that and match it to your tax return. In addition, if you're in a different state and they took taxes out in a different state, you might have to file a state income tax.
Do you find that a lot of people don't file those extra taxes? Do they just forget, or they just don't think it's necessary?
Well, I think it's twofold. I think people that move a lot don't update the addresses. So you moved and you forgot about it and you didn't keep records about it. So the matching notice or 1099 might go to a different address, forwarded to you, and you've forgotten about that $500 you won at a casino or $2,000 you made on a random job, and you just don't keep accurate records. And the IRS will find out about 6 months after you file the tax return. They will send you a letter saying, what about this item?
Because you made an important point during the break that I wanted to mention, that oftentimes the errors that are going to come back to bite you, or that you're going to have to answer for, are matching errors. So income that is reported to the IRS, they are expecting you to also report. And if you don't report that money, or if you don't report it the same amount, if things don't match up, those may be the things you hear about.
Correct. I mean, as we become more computer-oriented, all these items are automatically electronically filed with the IRS. So your W-2 is sent to the IRS by your employer, and when you file your tax return, they match the two up. So again, this would be an example. If you put the wrong federal ID number for your employer in the system, you could have a duplication of some kind.
And how long should people keep, they get their W-2 in the mail, how long should they keep that documentation, do you know?
Well, there's a lot of ways to decide that. I usually say 7 years because I want to be conservative about it. The IRS can audit you after 3 years from when you file the tax return. So you got to think about it. So if I filed my tax return on April 15th and they accepted on April 15th, the IRS has got 3 years to look at it. So you sort of get confused with the years. I always just make it 7 years a good rule of thumb, I think. And also certain items on your tax return, if you grossly understate your tax return, the IRS can actually go back 6 years. So there's,
wow.
if your liability is understated, which means if you owed $10,000 to the IRS, or you filed a tax return with $10,000 to the IRS and you really owed $20,000, they can look at it for 6 years.
So, best rule of thumb is, do yourself a favor. When you file those taxes, save all the documentation that was required to file your taxes. If you did it yourself, or if you've taken it to a tax professional, just keep it together in a file, keep it for 7 years, because if you need that documentation, some of it may be difficult to reproduce. I mean, some of it, obviously, you might be able to find, you might be able to reproduce from a digital source, but some of it might be difficult to reproduce.
Correct. I think in today's time, take the information, scan it, keep it somewhere safe, and it'll be easy to reproduce. And it really, if you ever were audited, and it's so much easier having great documentation, because I think audits go a lot faster when you have great documentation supporting all your tax deductions and income.
When you're prepared.
When you're prepared, yeah.
Do you find there's a lot of deductions that people miss out because they don't really think about it or look into it? Or
I would imagine so. The deduction side, we want to just make sure you get it right. I mean, buying a car, there's some extra sales tax deductions if you itemize that people don't think about. There's charitable contributions I think a lot of people don't keep great records on what they gave to charity, and just keeping the more accurate your records and the better they are, I think you'll do a lot better. Teachers get a little $250 deduction for being above the line deduction. So most of those deductions, people don't, I think if you don't have great records, you sort of, they're very hard to keep track of. And then I think anybody that rental properties and businesses, just keep good records.
And at the end of the year, you can't just guesstimate, because the IRS doesn't work in guesstimations. Yeah. Accounting doesn't have a line item for guesstimating. So if you are, you're working on your taxes and you're thinking back and you're like, I think I did, 3-4 charity events, and on average I give about this amount of money. If you ballpark it and you guess, and you have no documentation to back that up, and you get called on it, then you're getting caught in that guesstimation, and there could be penalties for that.
That is correct. Well, I think two things I don't like is when a client comes to me and says, "How many miles did you drive last year of business?" And they said, "Same as last year." Like exactly the same as last year.
Not possible.
Not
right.
possible. So we hate that.
It's like a red flag right there.
I don't know if it's I think it's something to consider, and just guesstimation doesn't work, and I think you've got to be reasonable and try and keep accurate records as much as you can. And the last thing I love to tell clients, I'm a preparer, but everybody, when you're signing your tax return, if you look down, it says under penalties of perjury, that you are signing that tax return under penalties of perjury.
My own personal taxes. So if you prepare my taxes, I am still held responsible, yes?
I'm signing as a taxpayer based on the information you did. And you, even though I prepared it, you are the one that is attesting to that tax return and signing under penalties of perjury.
Right.
We are talking with Russell Goldberg, who is with Witham, Smith & Brown. He's a tax partner over there. If you have any questions for any of our experts, you can call 407-916-5400 or text to 23680. And Russell, I want to give you an opportunity to give our listeners an opportunity to how can they reach you if they want to use your services?
Feel free to call me. My phone number, my direct dial is 407-937-2323, or you can call the office at 407-869-8900.
And what's the Witham website?
And our website is witham.com, WITHUM.com. And if you have anything to research, we have a great website and lots of information on many things.
And how long have you been doing this?
I have been doing this. I stopped counting because the president. So 20 plus years, maybe more than that. So,
well, and that speaks to having a tax preparer who obviously knows what they're doing and who is qualified. How would you recommend that a consumer start finding a tax professional, a tax preparer they can trust?
I would most probably, if I was going to pick a tax preparer, I would do two things. I would look. There are two certifications. The IRS has a certification called an enrolled agent. That is, somebody has taken a test and the IRS is satisfied that they are qualified to do it. And also the other person that would be a certified public accountant. We have to pass a test, and we have ethics and everything else. And then there is, to be a tax preparer, there is no, I think you just have to apply and pay a $60 fee with the IRS to be a preparer. You don't even have to have an education.
Well, Russell, we really appreciate you coming on with us and giving us some expert advice on personal tax returns. We are going to move on in the next half of the show to business taxes, because there's a lot of business owners that listen to this show, a lot of business owners in Orlando, and we want to give you the best advice on how to make sure you do it the right way, right, Holly?
It's an important season for small business owners as well. They have a lot at stake, and so we want to do our best to answer a few questions and hopefully make it a little easier.
So we're going to talk with our next expert who's in studio as well, Bernard Kiesel. We're going to do that in the next segment. You're listening to Drive Time with Holly. I'm Michael Yaffe.
And I'm Holly.
And we'll be right back.
Welcome back to Drive Time with Holly. Business and consumer news you can trust.
Yes, you are listening to Drive Time with Holly. I'm Michael Yaffe.
And I'm Holly.
And we have been talking about taxes today. The first half of the show, we focused more on personal tax returns. But we need to kind of shift gears a little bit, and we're going to focus on business tax returns and filing your business taxes this year, right, Holly?
Yeah, it's a whole nother ball of wax. So as a individual filing your own taxes, if you also happen to be a business owner or a small business owner specifically, you have lots of other things to consider, lots of additional record keeping, and responsibilities that reach far beyond just your own personal taxes.
Right. So we brought in another expert who can give us a lot of great advice on that if you're interested. His name is Bernard Kiesel. He's a certified public accountant and a certified financial planner. He joins us in the studio today. How are you, Bernard?
Yeah, I'm doing great. Thanks.
So before we get into the business taxes, I do have a phone call here who has a question about something on his taxes. So let's go ahead and take that call and see if we can answer his question. Let's go to JD in Orlando. JD, how are you?
Hey, I'm doing great, guys. Thanks for taking my call.
No problem at all. So what was your question for our tax experts today?
Yeah, my question is that I was able to settle a personal or private student loan, and they said they would send me a 1099 at the end of the year. And so I just wanted to see if there was any insight on how much I need to save or prepare to pay off that 1099 for settling a private student loan debt.
Okay. Well, the answer to that is it would be considered income, whatever the amount was that was settled that you didn't pay, and then you would be taxed at your tax rate. So it depends on what your other incomes are, how much more tax there's going to be on that. So
I see. So I just need to incorporate that as earned income, and then that would be part of my tax bracket or income bracket.
Right. It will be in whatever bracket you're in. It may push you to another bracket if you're on the cusp, but whatever your marginal tax rate is, which means the tax rate that your last dollar is being taxed at, that's what that's going to be taxed at. So it's additional income. And
do they typically send the 1099s that just like they would?
Yes, you'll get a form for that, and it'll tell exactly how much was reduced.
All right, very good. Well, hey, thank you so much for your help, guys. I appreciate it.
All right, JD, thank you so much for calling. Great question on that. And I know that some people, do you have a deduction? Do you have any deductions when it comes to student loans or anything like that?
The interest on student loans are deductible for most individuals, but if your income is higher, then it may be phased out and you wouldn't be able to use it.
But when you're making those payments, the interest that I can deduct, am I going to receive a statement specific to that, or will it be?
You should get one from your lender.
Okay.
Tell you at the end of the year what
exactly what I can file. Yeah. Well, it's interesting though, and I have to commend JD for thinking ahead and preparing for that, because oftentimes when people maybe they hit a rough patch and they cash out a 401k or they cash out a simple IRA or take some, withdraw some money, or in this case, settle a student loan debt. They don't prepare necessarily for the taxes that they're going to have to pay on that money. And so I commend him for planning ahead and not being surprised come April.
With so many topics on this show, that seems to be the advice we give out the most, is plan ahead. Be prepared. Do your homework.
Do your homework.
It should be like a slogan for the show or something. So speaking of planning ahead, we're going to talk about how to plan ahead for business taxes, filing your business tax return. Tell us.
Yeah, and I typically I tackle most issues from this angle. So let's start here. What are some of the most common mistakes that business owners make when filing their taxes?
Well, I think the most common mistake is that they don't have their business set up properly to start with, okay? So let's assume that they are set up properly. They want to account for income and expenses. It's really pretty simple. What taxes for businesses are, and it's generally the amount of money that came in less the amount of money that went out, leaves a net profit, which is taxable. I'm oversimplifying, but that's what you need to have. So you need to keep up with both of those things to start with. And people may pay for items outside of their business, not count it. That's a big one. But since we're talking about planning, the most important thing you can do is have the right entity to do business through. So if you're just doing business as yourself, that's the worst possible way to do it, and it's going to cost you the most amount of taxes. So you should look to creating an LLC or a corporation to do business through.
So as a sole proprietor, that can you may think you're saving yourself money on the corporate filings and what it costs to set your business up, through the state to properly register. But what you're saying is, in the long run, it can really cost you money.
It doesn't take very much income before you're way behind on that. So yes, and the reason I'm bringing that up is because we're talking about planning. Well, you can't do much about it for 2017 because the year's almost gone. But you can determine that you want to do 2018 the right way and have the right entity set up and have everything set up so that you can take things in and plan for how you're going to have your income and expenses and the proper entity to do it with. So
do better moving forward. Yeah, you mentioned it's money in, money out. It's pretty simple. A lot of people will try to claim expenses and things like that. Do people get in trouble where that's concerned?
Well, sure. I mean, the whole theme of this, I guess, has been what do you do to be sure you're not audited? And, well, of course, you want to be truthful and report everything. But as a taxpayer, it's your duty or your opportunity to pay the least amount of tax possible. So that means accounting for everything, which has been the theme also that's been projected by our other experts here. So, yeah, it's all important.
If you had true expenses that were business expenses, claim them. Certainly claim them, but don't get crazy and buy yourself, a new TV for home and turn that into a business expense.
Yeah, a lot of people want to do that.
Right.
But
we are talking with Bernard Kiesel, who is a tax expert. If you have any questions, you can call 407-916-5400 or text to 23680. Standard message and data rates apply. I did want to ask you, at the beginning of the segment, you said one of the biggest mistakes is people don't set up their business right to begin with. Do you have any specific examples of that?
Well, sure. The one that we were talking about, people don't set up an entity to do business through, so they do business as themselves. That has not only tax implications, but also liability implications. So if something goes wrong in your business, you're personally liable if you're a sole proprietor. You don't have a corporation or an LLC to have it in. So that part's important. But also, with the entity, you can set things up so that the taxes can be lessened by having that entity. And that's one of the first consultations I do with anyone is how are you set up? And then determine if there should be some things done to better that.
Right, to improve it. What record keeping should business owners be doing all year long that will make tax filing, that will make the end of the year a lot simpler?
Right. Generally, the best thing to do is to incorporate an accounting system so that you can post everything as it comes in, the money coming in and the expenses going out. You'll post that into an accounting system. Then at the end of the year, it's pretty simple. You push a button and you get the answer. This is what came in. Here's the detail of every different type of expense that went out and so forth. So, but it takes some expertise to install that. So, that's another thing that you might want to consult with a professional about. How do I do that?
To make sure you're getting yourself set up properly.
Right, so that you'll know. And it's really important because what happens if you wait until the end of the year to try to put all the information together for what your taxes are, it may be January or February of the next year, and you're trying to decide, well, I had this transaction for this amount. What was it? Well, don't remember. So, the best thing to do is to do your accounting real time instead of after the fact.
So we are talking with Bernard Kiesel, who is a CPA, also a certified financial planner as well. We're going to continue our conversation with him on business taxes coming up in the next segment. You're listening to Drive Time with Holly. I'm Michael Yaffe.
And I'm Holly.
And we'll be right back.
Let's be better consumers. You're listening to Drive Time with Holly.
Yes, this is Drive Time with Holly. I'm Michael Yaffe.
And I'm Holly.
And, the intro there says, let's be better consumers, but we also want to be better tax filers.
Well, that's a consumer for you. I mean, if we want money to spend, we've got to do the tax prep. We've got to report it all properly. So it's all part of the big cycle. And
we've been talking with a number of tax experts. Right now, we're talking with Bernard Kiesel, who is a certified public accountant and a certified financial planner. He's been talking to us about business taxes. And let's take a call. We actually have a call on that from a listener. And if you want to call, you can call 407-916-5400, or you can text to 23680. Standard message and data rates apply. Let's go to Otis in Orlando, who has a question on business taxes. Otis, how are you this evening?
I'm doing fine. Yaffe, how about yourself?
Doing good. So what's your question for our experts today?
Yes, I want to know how much income do I need to earn before it makes sense to set up some type of business entity in order to save taxes? I mean, if I'm earning $20,000 a year, would it make sense versus if I'm earning $100,000 a year?
Yeah, well, the more you make, the more sense it makes. The $20,000 is probably the minimum threshold, but it could very well be worthwhile. The way to do it is to make an analysis of what the income is and what it would cost one way or the other. The expenses of having your entity and versus not. But it may make sense to do it anyway to have the limited liability.
And I'm sure too, if he's a one-man show, that's one thing. But certainly, if he's paying any sort of employees or helpers or someone to help him run his business. Certainly, I would assume that setting up your business and going ahead and creating that LLC or that filing the business, registering the business would make sense.
Yeah, sure, it does. It may not make any tax sense, but it really makes sense to have all your business encapsulated in itself and not be intermingled with your personal life, which is kind of what I'm trying to say.
Does that answer your question, Otis?
Yes, thank you.
All right, thank you so much. So we're talking with Bernard Kiesel. And Bernard, I want to give you an opportunity to tell people how they can reach you.
Okay, great. Our phone number is 407-677-1040, and you can get us at orlandocpa.net.
Great. I had one quick question. How does a small business owner know when it's time? If I'm a relatively small business, or let's say I'm quite small, and I've been filing the taxes for my business, or my office manager has been doing it, or my spouse has been doing it for us, how do I know when it's time to seek professional help? How do I know when it's gotten bigger than I can manage?
Well, one thing that we offer, someone can come in and consult and say, this is what I'm doing. We could look at it and say, well, there are many times when I say, look, you're just not ready for us. You need to grow a little bit more. But then again, when things get out of hand, they usually know. They just may not want to make the effort to come in or afraid that a consultation would cost too much. But generally what happens is there's much more money saved by
doing things properly.
Right, and getting a consultation. So yeah.
And I would imagine too, like Mike mentioned earlier, that oftentimes if you're doing it yourself, you may be missing deductions. You may be missing the boat on some things, whereas a professional would be able to point out to you, hey, don't forget to be keeping up with your mileage. Don't forget to be keeping up with the oil changes on those company vehicles and stuff. So I would imagine that having professional help, especially once your business reaches a certain point, you're going to be saving money, and the emphasis isn't necessarily going to be on how much is this return going to cost me, or how much is this help going to cost me. It's how much are you going to help me save?
Generally, it doesn't take much to save more money than it costs.
Yeah,
for sure.
And Michael, one point I wanted to make both with businesses and with consumers is consider that we're rounding out the year. When the new year starts, tax season is going to be in full swing. You know,
I mean, you have to get your W-2 in the first month.
That's right. And don't try to call any of your CPA, your tax preparer friends after the first of the year. They're not going to take your call. They're way too busy.
Yeah, just a little bit, yeah.
But one thing to keep in mind is when choosing a tax preparer, is that tax preparer going to be there for you 12 months out of the year, or are they purely seasonal? Now, I'm not saying there's not a place in the market for the seasonal type tax preparer, but if you have questions in October, if you have questions in July, if the tax preparer is purely seasonal, keep that in mind. It may be important to you to be able to reach your tax preparer year round.
Well, I would think if your business is really growing and it's becoming a pretty big business, you would want someone who is available year round. Well,
or if it's your own personal filing and at some point you have a question or you've made a purchase and you want to know, is this is a business expense, but I don't have my own business, but I'm buying it for work. It's an unreimbursed business expense. You may want to be able to pick up the phone if you're adopting and you have questions about credits and things like that. To be able to pick up the phone and talk to your tax professional, if that's important to you, consider that, because if you're choosing a service that's purely seasonal, that maybe only pops up for a few months out of the year, you may not have the tax advice that you need when you need it.
And I definitely appreciate all the guests that we have had on today. We were just talking with Bernard Kiesel. We were also talking with Russell Goldberg. And earlier we were talking
Prithi
Deswani. So I appreciate everyone coming on. We're going to post this show on our social media. How do they get on our social media, Holly?
So you can find us at drivetimeholly.com. And you can also listen to previous shows by visiting rewind.drivetimeholly.com. And after every show, we post links to follow-up information, support information, resources that we've talked about during the show.
Yep, and just like our Facebook page as well. I appreciate you all joining us this evening. I hope we've gotten rid of a little bit of your fear.
Shed a little light.
When it comes to personal taxes and business taxes. I'm Michael Yaffe.
And I'm Holly.
And we'll catch you guys next time.